The genuine unlock of the United States economy and the real institutional money streaming in, I believe, will make it difficult to foresee some of the opportunities for the upside. I believe this to be the case. Greetings, everyone. It's me, Kevin Cage, here with yet another cryptocurrency update. There is a lot that we need to go over today. According to the Ripple CEO, who was quoted in that footage that was posted by Good Morning Crypto, it is difficult to forecast how the upside will be when institutional money is entering the market. In addition, I am aware that Brad Garlinghouse is not going to change his projection that the total market capitalization of cryptocurrencies would reach $5 trillion by the end of 2024. Consequently, time is running out, and at this point, all we want to do is observe price behavior. As a gentle reminder, this is not BlackRock's money per se, rather, it is the money of their clients, yet this is still a significant amount of money. Next, we can see that Watcher Guru has disclosed that BlackRock now has over 304,000 Bitcoin worth over $21 billion for their spot Bitcoin ETF. We have previously discussed projections of net inflows for the Bitcoin spot ETF ranging from $50 billion to even $220 billion, and now we are able to say that $21 billion have been received. According to Altcoin Daily, roughly 5% of the total supply of Bitcoin is held in exchange-traded funds ETFs. There are 34 exchange-traded funds that control more than 1 million Bitcoin. Moreover, this is only for Bitcoin, which is the most valuable asset in the market. It is not yet clear how much money will be invested in Ethereum spot exchange-traded funds ETFs, as well as in future ETFs that are likely to be introduced in the near future. On 21shares.com, you can view some examples of exchange-traded products ETPs, which are now being used for several alternative cryptocurrencies like as Solana. Exceeded $981 million. One option is to use Ethereum. We are able to observe XRP, which is worth $54 million, ADA, which is worth $43 million, and so forth. I believe that it is simply a matter of time for other alternative spot ETFs to be allowed in the top 10, top 20, and then working their way down. This is mostly due to the fact that Ethereum spot ETFs have already been certified. The head of digital assets at BlackRock, Robert Mitchnick, was one of the people with whom we had previously shared a clip. In essence, he stated that there are 3 additional investable assets that might be used as alternatives to spot ETFs. How about Solana, XRP, ADA, AVAX, and other cryptocurrencies? In addition to that, we have Dr. Martin, who is the head of research at Uphold. In the end, our exchange-traded products, which are known as European alternative ETPs, are finally arriving. Valor is transferring alternative coins to the Frankfurt Stock Exchange, which was initially scheduled to take place at the beginning of the year. Our first stop is with Hedera. As a result, he distributed an invitation to the launch in German below. It is extremely intriguing to see additional ETPs, and it blows my mind that HBAR is still not listed on Kraken, at least the last time I checked. I have seen them partner with a lot of different things. At this point, when we are looking at the chart of the Bitcoin price, we are bored, and we are waiting for the next cycle to maybe begin to make large moves in all-time highs. We are aware that in order to enter the market, we must liquidity. Consequently, how does liquidity get into the market? Throughout the course of the last few cycles, we have examined Raoult's total liquidity index in conjunction with Bitcoin. The results have demonstrated that liquidity has entered the market and Bitcoin has reached 6 figures, possibly even multiple 6 figures. However, how does liquidity arrive in the cryptocurrency asset class? If it is comparable to the previous cycle, or will it be a little bit different? Due to the fact that quantitative easing and interest rate reductions were implemented during the last cycle, on the basis of the current geopolitical situation, my own bet and guess is that it might share some parallels with the cycles that came before it, but it is most likely going to be fundamentally different. In the previous month, I published a few bullet points that detailed the various ways in which liquidity can enter the markets in addition to interest rates and quantitative easing. Therefore, if you wish to pause the screen, I hope you are able to read this and it is not too blurry. However, there are a lot of additional methods that liquidity can enter the system. Simply by virtue of the fact that elections are scheduled for later this year, I believe that we are going to be taken aback. What I believe is going to happen is that there will be a significant push around decentralized identities and voting narratives, as well as other things. Furthermore, if you are aware of any additional methods by which liquidity can enter the market that are not included in this list, I have compiled a few bullet points for you. Kindly inform me of this. The next thing I noticed was that Bank XRP shared that Riplex had retweeted this for the Axelar post that was outlining a $16 trillion opportunity for real-world assets. Riplex had also tagged Citi, Deutsche Bank, MasterCard, Northern Trust, and other financial institutions. In addition, we are aware that Ripple collaborated with the Axelar Foundation some time ago in order to improve the interoperability of the Axelar ledgers across blockchains that connect to more than 55 different networks. In addition, we are aware that regulatory shifts, such as deregulation or even simple tweaks to capital requirements, can also serve as a stimulant for market activity. This is something that the BIS has acknowledged. The influence that MiCA has had on stablecoins in the European Union is something that Wrath Economin brings to our attention. The MiCA framework has been the subject of extensive discussion in earlier films. Nevertheless, this asset class is currently being regulated and will continue to be regulated in the future. In addition, I am aware that a significant number of us are of the opinion that regulatory-based regulations would be one of the most significant borings in the history of the world. In other words, a regulatory catalyst of some kind. We are going to listen to this 30-second clip that was released by the head of the CFTC, who is also an investor in digital assets. As you are aware, according to the law that is currently in effect, we have commodity tokens, and what we have been experiencing at the Commodity Futures Trading Commission CFTC for more than a decade is a gap in regulation in which we do not have the tools necessary to govern the market. Additionally, it ensures that a sizable portion of the market is not subject to regulation. Therefore, when you include commodity tokens such as Bitcoin and Ether, you discover that they account for 60% of the total market capitalization of the cryptocurrency market. To put that into perspective, I believe that we are facing a significant challenge when it comes to bridging that gap. Moreover, this is the kind of thing that this legislation accomplishes. As a result, the chairman of the Commodity Futures Trading Commission CFTC continues by stating that Bitcoin and Ethereum are commodities that account for around 60% of the overall crypto asset class, with 40% not being regulated in any way. The question of whether or not Bitcoin and Ethereum are even regulated is possible to raise. The amount of regulation that we actually have in place is rather high. Do I wish to be subject to know your customer regulations? However, is it likely that we will be able to get it? Indeed, to a certain extent. This is a nail-biter, because we want positive regulations, but getting through the process of regulating is complicated. Our goal is to avoid regulatory overreach similar to that of the SEC. This is the clause that requires the cryptocurrency sector to identify consumers in order to avoid sanctions. It is part of the United States Senate's assault on cryptocurrencies. Considering that we are still in the beginning stages, it would be simply mind-boggling to me if there were actually debates on the right to self-custody. The right to self-custody of one's own possessions ought to be recognized by all individuals. No transaction limitations or other restrictions should be imposed in any way, in my perspective. The crypto asset class that has reached multiple trillions of dollars is not going anywhere very soon. The number of investments is really high, infrastructure is currently being constructed, and we are working on regulating the industry. Moreover, there are additional jurisdictions or regions such as Dubai that have adopted the blockchain strategy. I am aware that this occurred quite some time ago, however, there are other areas that are moving forward. For all documents to be digitized so that they can be totally run on blockchain. We are aware of a number of centralized corporations and organizations that are currently facing a threat from decentralized finance. However, I believe that decentralized finance has the potential to enable a great deal, and they are thrilled about the possibility of credit risk assessment and genuine automation with smart contracts. The answer to this question is, how do you control it? Then, of course, this results in the creation of DIDs and other forms of decentralized identities. To put it simply, there are a great number of additional factors that need to be considered and then regulated. On the other hand, we are witnessing the implementation of scaling solutions on a variety of networks today, including decentralized IDs, zero-knowledge proofs, and a variety of other things. The National Bank of Georgia and Ripple have formed a partnership to digitize Georgia's economy.